That was IMF talking about the new estimates that they have released. Mayuresh Joshi of Angel Broking is now joining us. Mayuresh, what do you make of the sudden small cap surge that we are seeing in the last half an hour every day, or maybe about 1 hour or so? Do you think that it's pointing out that markets are seeing very, very excessive liquidity, and now things can only get worse from here?
So again, largely I think Pankaj, it is there in the reckoning. So I think with negative bond yields of around $12 trillion odd, I think the liquidity gush is expected to continue. Couple that up with expectations of GST and strongly getting cleared probably in this monsoon session, and corporate earnings again expected to be a lot more stable this time round. So I think this is what is probably creating the required impetus that the Indian markets probably need, and the positive sentiments that you're probably seeing at this point of time is still continuing. And we're just brushing aside any probable data that is coming through, trimming down of global GDP estimates, the trade data which came through, the weak IIP numbers, what will happen through Brexit. So I think the markets are looking at the other side of the story in terms of probably the positive sentiments to play through, and the positive sentiments are being reflected in the Indian markets.
You think the biggest positive that has been is cost of funding getting lower?
Oh yes, again, and if you look at the mix, probably I think that's the whole point that I'm trying to harp about is, again, the NCDs is one route that a lot of corporates or financial institutions might really tap through if their paper maturity is more than 2 to 3 years on the short-term side. So largely I think that will reduce close to anywhere between 80 to 100 odd bips in terms of their cost of borrowing. Couple that up with what has happened in terms of transmission, I think the end user is also going to get benefited over a period of time. So my own sense is that the cost of borrowing is expected to come down over the next few quarters. That probably will have a positive sentiment specifically for the financial institution in terms of their spreads. And again, I think even the end user probably benefits in terms of lower interest rates being passed on to him.
So, if you just, you were to look at, say, cost of borrowing globally, it's been much lower. You think all that money will come down chasing here into dividend stocks, because at least you'll get some yield instead of zero or just about less than 1%?
So that was always the situation, right, Pankaj? I think for any institution which was outside India, I think the cost of borrowing was very, very minimal. I think even if you add a few of the currency parameters to it in terms of certain bips adding on what currency we are probably hedging through, it was still very, very cheap. Secondly, I think you look at the yields, negative government yields at a 10-year paper across the globe, and you're still having positive yields on the Indian paper. So it makes absolute sense, even for a risk-free investment like a yield or a 10-year paper, to probably borrow at that rate, probably invest at that point of time, and probably get that arbitrage through.
Right. What do you make of the pharma rally that we are seeing today? It was long overdue. So, even names like Wockhardt have gone up 10-12%. Any view on Wockhardt, and then we can talk about other names?
No particular view on Wockhardt per se, but again, I think this is largely being fueled on two counts. A, I think the kind of FDA concerns that we had witnessed over the past 2 quarters for the pharma industry in general, I think a lot of the pain points is what the market believes will get through probably in this fiscal, and the remedial and the remediation issues should probably have some amount of resolution by the end of this fiscal. What this probably means is that the earnings in FY18 will be far better on the base of FY17, both in terms of the generic pipeline, specifically for the US markets, as well as the domestic business probably holding well. Now within this part of the business, the formulations business is something that is expected to do well, while the API business probably is expected to give fair or reasonable amount of returns. So if you combine all these aspects together, my own sense is that the markets are probably preempting a good set of numbers to probably come through from the pharma pack. And largely I think that is what is fueling the pharma rally across stocks that you're probably seeing in the sector. But I'll be extremely stock specific at this point of time, looking at the earnings matrix and the valuations as well.
Right. As far as PSUs are concerned, ex the bank, so something like a Coal India, maybe a BHEL, anything that you like over there, all of these names are up 3 to 5%.
No, Coal India, again, Pankaj, as I've mentioned time and again, I think it's a long drawn-out story, what happens probably in terms of their production estimates over the next 2 to 3 years. And if one goes by the ministry, say, in terms of production expected to grow at that pace, one can really expect good amount of volume growth to happen on that front. But it's really a matter of what kind of realizations come through, what happens with the e-auction realizations as well. You've seen a steady decline probably happening on that front. And what happens in terms of the grading of coal and what price increases can Coal India take specifically towards their high-grade coal, and whether they will be able to do that. What do they do with their cash balances? And though I think the dividend yield is pretty impressive at this point of time, it is a long drawn-out stock. So this is not a stock that can be played out over 2 or 3 quarters. You need to have patience over the next 2 to 3 years, to say the least, for all these positive elements to play out on that stock. The other stock that I'll probably like is Engineers India within the PSU pack. The stock probably has not performed up to the market, might not perform over the next 2 quarters as well. But with the capex that a lot of OMCs are pursuing and are expected to pursue over the next 2 to 3 years, my own sense is that slow and steadily the order book will increase at a very decent clip. You're probably seeing good execution come through, which will have a positive effect on their margins. Cash-rich company, no debt on its books, which gives it the leverage benefits of having operating efficiencies. So my own sense is that the numbers might be soft for Engineers India, but if one really has a view of more than 2 years, along with the revival that we've probably seen in the OFC capex plan, Engineers India can really stand out.
Right. Something like a L&T, would that be a better way to play the capex story that you just said, or that's doing well, but everybody knows that?
I think it's a known fact, right? So for L&T, I think it's a proxy for how the Indian economy is going to progress and function. And if one largely believes that in the second half of this fiscal, with the kind of government spending that we're seeing in the front loading of expenditure that is expected to come through, if that has a positive impact and an impetus in terms of private capex coming through in the second half, along with revival of corporate earnings, we're definitely going to see an uptick both in terms of order wins for L&T, and the kind of execution that they will do will really augur well in terms of what happens in terms of the EBITDA performance. Secondly, I think the kind of margins that these orders will come, one really expects the margins to be far better than what we've witnessed over the past couple of years. So you've obviously got an operating leverage benefit come through as well, because as execution improves, they've got a very decent order book as on date around 2,39,000 crores, and again higher margin orders gives a positive impact. So I think within their subsets, I think heavy engineering, infrastructure has really done well in the last quarter. You're probably seeing the end in terms of the legacy orders on the hydrocarbons business. You're probably seeing L&T Infotech get listed tomorrow, so there's unlock happening on those fronts in terms of the non-core businesses. So yes, I think it's a known fact that it's a recovery theme on the capex story of India, and L&T absolutely lies as a proxy to that. So if the Indian recovery has to happen in the second half, L&T probably will show significant amount of growth as well, corresponding to what we'll probably see in the capex side.
Right. As far as apart from this, we've got numbers coming in from HUL that we saw earlier. How would you rate those numbers? Were they very okay set of numbers, but names like HUL don't fall, so there is no reason to panic?
No, again, I think largely as a theme, consumer staples, durables, FMCG, I think it has to be understood from here on over the next 2 years. Largely these stocks had languished over the last 2 years. A large proportion of them, I think a few stocks did do well, Pankaj, but largely because of monsoons not being there, and again of the drought situation. But again, I think if largely one expects that the rural demand should hold up because of good monsoons, and the 7th pay commission expected to come through in the coming month, having a positive impact in terms of the volume growth for the FMCG companies. It should really be understood in the context that this is not going to happen in this quarter or the next. It might start happening from the second half, which is quarter 3 of this fiscal, and those trends will become more prominent as the months progress. Secondly, I think in terms of urban consumption, the urban consumption probably has held up pretty well. And though we've seen divergent data points in terms of the durable data points within the IIP number, on non-durable as well as the durable side, my own sense is that this should hold up. Now what it does is it does magic to the volume growth. Once volumes increase in a significant manner, you have got the average or the leverage probably to do the pricing because of demand coming back. If that probably happens, that takes an effective positive sentiment on the EBITDA margin and again on the return ratio. So I think a lot of these companies are expected to do well, but again I think one really needs to understand that whatever we will see in terms of traction, either in terms of volumes or the bottom line, will be evident only from Q3. I think Q1, Q2 will be a little bit sluggish for a whole host of these companies as well.
How would you look at Max Financial Services? It's up 10% right now. After the merger with HDFC, the growth there can be much phenomenal than what is expected?
What is expected, and again I think the kind of model that they're probably running is going to ensure that the growth sustains and remains in that fashion. So yes, I think it has moved up significantly over the past few weeks since the entire restructuring program and schedule was announced. But my own sense is that the earnings trajectory for Max should continue going forward. What we're probably seeing again is a huge potential in terms of the core business itself, and with the kind of partners that they've got, both in terms of Axis and HDFC, I think that will supplement their growth going ahead. So yes, I think if I have to take a long-term call on the stock, I remain very optimistic on it.
I think SKS Microfinance would be declaring numbers tomorrow. Any view on SKS Microfinance?
Again, it has moved up significantly, Pankaj, and one really needs to understand the valuations within this microfinance space. Yes, the pie can increase significantly going forward, and you've got a whole host of non-banking financial companies who have already applied for small payment banks who are also into the microfinance business. But again, I think valuations are extremely important at this point of time. Any earnings disappointment that comes through, either in terms of their spreads, which is expected to be stable at least for this quarter or the next, can have some amount of dampening effect onto the stock. They've securitized their book pretty well. So I think in my sense is that they've actually grown their non-EP book significantly. The securitization part has been extremely robust, and that probably gives healthy signs of balance sheet probably consolidating at these levels. And again, the expectations of balance sheet to grow as we progress over the next 2 to 3 years, with advances expected to grow at a decent clip, and the asset quality expected to remain benign. But again, I think valuations, in my opinion, are a little bit stretched at this point of time. So one really has to stock or cherry pick within the microfinance space at this point of time.
Right. How would you rate IOC? It's up 4% right now. Any view on IOC or HPCL, BPCL? You know, they continue to lead the pack in terms of gains.
Well, yes, I think the downstream have done extremely well, and again, I think the expectations largely are that GRMs should be far stable. You are expected to see inventory gains probably come around in this quarter. And again, I think the large part of their gains over the past few quarters has been consummated with the fact that their debt has come down, the working capital constraints have come down because of the auto fuels being deregulated. There is no subsidy burden on this front as well, with expectations of kerosene hikes of 25 paise, which we've read through over the next few months. That has a positive effect as well. But the kicker for the stocks will be the marketing margins. And if the marketing margins are expected to rise anywhere between 50 paise to 75 paise over the next 1.5 years, that has a telling effect in terms of their earnings. So the earnings per share increases in a quantum fashion if these margins actually go up in the proportion that one really expects. Again, I think one really needs to understand that within this pack itself, I think there are some companies who are having E&P assets as well. And there is some exploratory upside even on that count. So I did like the OMC pack a few quarters back. So any investor holding on should continue holding on to the OMC pack.
Right. Any view on Aditya Birla Nuvo? It's up 5%, 1,300 rupees right now. Do you think it's a company, because of its structure, was not getting, any major or, was getting a holding discount? But now do you think that that discount would narrow as they are looking to simplify their structure?
Well, yes, I think this is one story that I've always liked. And again, I think the stock has moved up significantly again over the past year and a half. And again, yes, I think the entire value unlock proposition should play out meaningfully for Aditya Birla as well, if it happens and when it happens. But largely, I think as the kind of discount that the holding company probably gets because of its divergent businesses that it operates out of Aditya Birla Nuvo, I think once they form or formulate a plan in probably demerging or listing their entities separately, I think that will create value unlock. How much of an impact that will have on the stock price, I think time will decide. But I think the stock, in my opinion, has already moved up significantly, and it has exceeded our expectations in terms of price movement.
Just a word on PSU banking space. Do you think that's a space that can do well? It has already done very well.
Again, largely, I think the numbers will do the talking, Pankaj. The market expects the asset quality to remain stable, but if you look at the asset quality profile itself, I think there are a huge number of assets even within the system which have still not got recognized. So I think it's up to the PSU banks on how and which manner they recognize these assets and what kind of provisioning that they do. Secondly, I think if they are expected to accelerate the provisions, if they do that, I think you'll have increase in credit costs, and that might have some amount of effect. And third, I think the advances growth has been quite muted because the banks are more concentrated on recoveries and upgrades at the same time, ensuring that none of the fresh loan or advance book probably goes into slippages. So the restructured book also will become very, very important for the pack as a whole. So I think one really needs to look at numbers. I think a few numbers are expected to be extremely stable. A few numbers, if they exceed expectations, the stock might jump up from the current levels as well. But really, it's all about numbers and all about asset quality and the management commentaries thereof.
Right, Mayuresh, thank you so much for joining us here this afternoon. As we were talking to Mayuresh, markets are there itself, but I just wanted to highlight that all the pharma names have seen the surge being much higher than what it was earlier. So Aurobindo Pharma was around 785, 790. It's now close to about 800. So that's a name. Wockhardt was up around 7%. It's now up 13%. We did a check earlier as well. It was up 10% that time. Cadila Healthcare is at the day's high. Stride Sashun, Jubilant Life, Ipca Labs, Piramal, and the list can just go on. So pharma is the buzzing sector right now.